Good morning. Today is the 7th of 10th month. That's October 9th, 2023. This is a trial-based video from me. You can see the back door is open. There's a piece of garment hanging behind there. Uh, I would like to introduce myself first. My name is Cihat Çiçek. I'm from Turkey. I'm an economist and manager. I have managed many companies in different areas of economy and worked for Fortune 500 companies, three of them, in fact, as a finance manager and director. After I retired, doing the services disease, I decided to start some videos for helping small investors deciding what to invest in, what are new investments, what are different, how can you make money from different small investment ideas. So I set up this channel a long time ago, but I never had a chance to start an English video. So this is basically the first trial one. Uh, right now, I have to give you a sampling of what kind of ideas I can propose, which are different from others. First of all, I am more close to monetarist approach, which is like let's say Peter Schiff and Professor Henke in economic outlook, and those are almost similar ideas about government interventions and Fed interventions to the economy, which are supposed to be helping but causing more damage than solving the problems by kicking down the can. So first of all, let me give you how I approach in Turkey, and I have about 280,000 followers right now because I made them quite a lot of money by starting with very small amounts of money. But first, you must understand the conditions of Turkey are not matching exactly the United States conditions. Every country has specific terms that they go through. For example, in the United States, your credit card interest rates are the highest. I know I'm following all the channels. It's about 20% right now, annual interest rate. Whereas in Turkey, due to some political advantages during elections, this and that, the government offered very low interest rate, which caused in 2 years incredible high inflation. Because when you offer very cheap loans, everybody gets the loan and starts using the money or investing the money, which fires up the inflation. So, knowing that the inflation will be fired up as an economist, I offered my followers go buy gold. You can buy gold in Turkey, probably in the States as well, from gold and silver channels. Go buy gold and only pay the minimum. Don't pay the rest of the payment. So the minimum was about 10% to 20%, depending on, they change the rules. They keep changing the rules. If your credit card line is very high, they start to increase how much the lowest base payment you should be making monthly. So by carrying over the debt to the future, paying the minimum on time, we use the money in Turkey. You will see this is incredibly high, but it cost us 25% annual, whereas inflation was 100%. So I expected it to be 100% because we are looking at future inflation, not the past inflation. So basically, the future inflation being 100% and investing in gold, in local money terms, gold increased about 65%, whereas it cost us 25% only. Because it's a loan, the total cost is just the interest cost, because you don't have your money invested where you lose due to inflation. But if it's a loan, your total cost is just made up of interest. You cannot lose from It's the people who gave you the loan. It's their problem. How much their money loses value. Your total interest loss can be only the amount of interest you are paying. So from no money, just from a line of credit, we made about 40%, 25 minus 65, 40% profit, depending on the line of credit you have. So this was an opportunity which was not offered overseas. It's opposite. High interest rates went higher, and they tried to stop the inflation, which is not possible according to me. It just delays inflation, because inflation, there is only one main cause of inflation: expanding the monetary supply, and which means basically for some new investors, just printing more money, and without having a collateral, just printing a lot of money. So if you double the money you printed and the good for sale is only remaining the same, the price of that good doubles as well. So as I live in an inflationary country, I'm 68 years old. I'm very informed about inflation and its effects and how to protect myself. Okay, how can you make a lot of money during inflation? With gold? With stocks? No. By getting long-term cheap loans, okay? Because they are fixed in the local money terms. And as inflation creeps, like imagine you bought a house with a mortgage in the US about a year ago at 3% mortgage rate. Now, with the 3%, the interest rates went up to, government, let's say Fed rates went up to 5.25, and new mortgage rates are around 8%. So you are beating the inflation with a 3% interest, and your house is appreciating. You are getting rents on top of it. You only invested 1/5 of the house. So, but the whole gain from the house is coming to you as a profit. So this is another idea I proposed in Turkey. We bought very cheap houses, mostly like 1 bedroom, 2 bedroom houses, which are what you can call median houses or apartments, let's say, instead of flats, rather than family houses. So what we did, we paid only very small portion, like 20%, like you do in States, and then took a 10-year loan. We do not have 20, 30-year loans in Turkey. So 10-year loan was good enough to cover just, we had a person to rent the house we invested in. And as a difference, in US, the rental can cover the total interest payment. It's possible because it's a 30-year installment. But in Turkey, with a 10-year, you cannot cover just paying the down payment and just keep getting the rent. So it does not match your requirements. So you should be adding on top monthly to meet your loan requirements, mortgage payment requirements. But the good side in Turkey is, as there is so much inflation, imagine like this in States, you took a mortgage of $200,000 and inflation was 60% a year. Your $200,000, this is my magic computer, the highest level, work solar system. 60% of your 200,000 loan times about $80,000 purchasing power is left from your loan without any payments, without considering monthly payments. So it keeps melting like a ice under the sun. Okay. So this way, in 2 years' time, 3 years' time, our loans that we took out for the houses melted so fast. Right now, we have only 2,000-3,000 US dollars to pay if we wish to, and not even 10 years are waited. Like after 5 years, 4 years, and already the rent exceeded because of inflation rents are increasing at the rate of the inflation. Houses are increasing in price at the rate of inflation, but our payments are fixed. So they are just stuck there. This is a problem in Canada. I know, like in Canada, they give you only 5-year fixed rates and then they renew it. Right now, people whose mortgage rates are renewing, they are getting extremely high new interest rates. So their payments are doubling, and there's a big payment problem in Canada. But in Turkey, like in US, you can get a fixed rate loan for 10 years. One time when about 3 years ago, when inflation was low, when I mean low, around 15%, uh, we had a 15-year loan, but now it disappeared and it's not worth. Even if somebody gives you a 15-year loan, 20-year loan, um, during very high inflation, your monthly last 5 years and 10 years. Years is even more than enough, to take out. Uh, so these are the main differences. So what can I offer for the U.S. Citizens or people living in the U.S.? There are investments in Turkey, which I attach the link below in English. It's a mutual fund site of the government of Turkey. It's not belonging to government. Government is just keeping the ranking table. You cannot invest there. You have to buy your mutual funds from any bank in Turkey, which are listed in that mutual fund list. So, what are the advantages? Just let me tell you one example. I'm not going to show you on screen right now, but I will just inform you. For example, in 1 year, the first one returned 282%, second one 245%, third one 240%. So if I go down about 20 Turkish stock exchange mutual funds, which means mutual fund means in stock exchange, a pack of how do you say in let's say like shares, a pack of shares. Like you have a Coca-Cola share, for example, you have a cement company, you have a technology company, all these packed group by a person who is 20, 25 years with an expertise. They choose and change what's inside the mutual fund. So you don't worry about it. And mutual fund is only priced once a day at the closing of the day. Today I can invest, and I do invest in technology companies in US through Turkish banks. And if they increase, uh, I make a similar amount of money that are in the package. So I can invest in petroleum, I can invest in commodities, and Turkish investments, Euro bonds, the American, like your American bonds. So that way, if you imagine a 2% and 280%, I just described the first 10. If you even go down to hundreds on the line of this web link I gave you in the bottom, you will see that US dollar in the same term during that 1 year, US dollar increased. I'm just checking while I'm talking with you. In one of the just shares, underneath it will show how much the US dollar lost value, how much the gold increased, physical gold. So during this 1 year, physical gold increased 58.2% in Turkey. Euros increased 56.92. US dollar 48%, 48.35. So if we deduct 48% from 200%, 150%, 150%, you end up getting during 1 year an American stock exchange gain like 10%, let's say. You make it in like for 15, 20 years of growth, you can make in the S&P 500 and Nasdaq, you make in Turkey, just make the money, return to US dollars, take it back. Okay, so that's how the foreign companies are investing. Turkey's note is very low right now, so therefore, although this such a sweet economy, most of the funds, retirement funds, cannot enter Turkish economy because of their rules, And but so far, Turkey has never missed a payment for since setup. Let's say government loans, government bonds, they are always paid on time, and you won't believe how much is a government euro bond in Turkey pays. About twice as much as United States. A 10-year, 17-year bond, I just checked this morning, is paying 9.25% in US dollars twice a year. Okay. So, and you can buy a $1,000 bond for just $820, and you get about 3.4 each payment every 6 months. So it's calculated in overall, it gives you 9.3% interest in US dollars. And in US, now it says at the top about 5% for a 30-year loan. It just, I just had some idea like this. Normally, if you buy a mortgage in the USA, you will pay right now close to 8%. I know it's about 7.9% right now to get a mortgage loan. So if you have a cash money instead of buying with a loan, mortgage, what you can do, and you don't have to do, this is not an advice, I'm just telling you of the opportunities I'm seeing. If you believe that the Fed will decrease the inflation to 2% in the future, a 30-year 5% is about 150% more than 2%. So it's an incredibly good deal getting this loan, about 5% at the 2% inflation level. So if this you think works and you're getting a 30-year bond, whereas you can buy a 30-year mortgage in a house, which is, let's say, roughly 8%, and this bond gives you 5%. So your real cost, if you just pay the down payment for the house and just buy with your other money the American bonds, I'm not talking Turkish bonds, they are extremely well. I'm just even giving the case for US bonds. So what happens is your home price, you still own the whole of the house. You control the whole house price. Even if you pay for a $500,000 house, you just paid $100,000, and you bought $400,000 worth of American bonds, 30-year bonds at 5%. Your cost is 3%. 8 minus 5 coming in, 3%. So you don't have to wait because the interest rates are at 8%. Most people are decreasing the value of their houses because they cannot sell. Most people cannot take an 8% interest rate. So you can get very good deals by making arrangements, and checking how much you can cut the price down. So this is one opportunity. Second, the house price will appreciate. You will get the rents like you own the house. You'll get all of the rent, and rents will be enough to pay the house price just from your because you just made the down payment, and your mortgage payments will be met by the house rent. So what happens to the other $400,000 bonds you bought? Okay, they bring 5%, that's not the whole game. Because if Fed succeeds in the future to decrease the, let's say, inflation to 4%, 3%, and bond interest rate starts coming down from 5.25 to 4, 3, the value of your bonds will go up because they are giving very high interest rate. Okay, so now they are even more valuable. So the reverse case, if interest rates keep passing this 5.25, 6, 7, 8, fine. In the interim, you are losing money because you are owning the bonds, but you are in control of the house. So that means inflation is continuing at 7-8%. If interest rates are going up to 7 and 8%, you don't worry because you hedge your bonds with the house. Okay, and that's a long-term investment, like 10 years, 5 years, who cares? And in the end, if unless they succeed to lower the interest rates and inflation 3 years down the road, 5 years down the road, your home will be protecting you. Okay. On the opposite side, if they succeed, if you trust the Fed, then that they're going to reduce the interest rates, and then you will make a lot of money from the bonds. Okay, so I guess this is clear enough. Bonds issue is a bit hard to understand because increasing of the interest rate is not good for bonds, because that means nobody wants your bonds. So you are giving them more interest, so they buy it. Okay, so it's a controversy because a country's money is getting valuable, US dollar DXY getting again more valuable because it's paying high interest rates. However, on the opposite side, it should be just the opposite because nobody wants to give the US a loan at the low rates anymore. They say, you want my money? Give me more, give me more. Okay. Like a low grade company asking from a loan from a bank. He won't get the best rate. He'll get the worst rate. Okay. So that's what's happening. And if you get a loan, if you are a bad company, let's say about, in a hard situation, between a hard place and a rock, then just because you found a loan with a very high interest, would your company value go up? No, opposite. You are still in a bad situation. So, but the world is not a logical world in economy. It's illogical. So it's just with senses, how you feel about it. So basically, this is the part I wanted to explain this time. And about the Turkish mutual funds, you can buy at very, very low prices. You don't have to invest two, three, $5,000 like in the States. I can buy you about 100 different mutual funds just with $100 in Turkey. So this is a big opportunity to buy it. I put the site in English. So on the top, if you click the Turkish flag, it becomes Turkish. If you click the English flag, it becomes English. So I don't know how you can invest, but you can invest through investment companies as well. Your shares will be kept separately at a government lock. It will not be given to a certain bank. So if you buy from a bank, these shares of companies or these mutual funds, if they go bankrupt, your shares and funds will be protected. They will be saved in your name, under your name. They are not even given to the company or the bank which bought them for you or which sells you for them. You can even enter the site and lock them. So even the companies who sell and buy, the shares, even they cannot reach them. They are locked. Okay, unless you open the lock, they cannot even reach it to sell it. Okay, so this is just a trial, and I haven't been practicing English for a very, very long time, and especially talking, as you could see, sometimes I'm just getting locked and thinking of what was that word, shares. Okay, so but uh, ideas are important. So you can look at the world in a different point, like never use credit cards. On the opposite, this is a good chance to use my credit card. Okay, or never buy a house with a loan. On the opposite, even if I have cash money, okay, you could choose buying two houses if you have enough credit line, even three if you have the cash money, instead of buying one and put in the renters. And this is shown in many YouTube videos in English as a growth way. But this one I am telling is for especially good for possible for people who have the cash to buy the house. Okay, and they are in profit no matter what happens. Okay, they are hedging the house with the bonds. So I gave you two different informations for today. I will not. I don't intend to run this channel continuously or increase my followers. This is just a informative thing. I'll probably make another one maybe in a long time. So uh, I wish you all a lot of money, good investments, many good returns, and happy days. See you. Bye bye.